The coronavirus bounce back loan scheme. Does it apply to property businesses, buy-to-let landlords, property entrepreneurs? Well, in this video, we'll find out exactly why it does, so stay tuned. My name's Ranjan Bhattacharya. I've been investing in property for about 30 years now. This is my channel. If you're new to it, make sure you subscribe and hit the bell icon. We release new content each and every week, and it's all dedicated to helping you be more successful in property. In today's Property Breaking News Bulletin, we're going to cover the new government's bounce back loan scheme. Previous loan schemes and coronavirus initiatives aimed at helping businesses have basically bypassed property entrepreneurs so far. We have been, if you like, the neglected business sector. But now finally someone has listened and brought about a package of measures that can actually help us as buy-to-let landlords and property-related businesses. Today, to explore exactly how you can claim your bounce-back loan to help your property business get through coronavirus, I'm joined by Andrew Roberts. Andrew Roberts is founder of The Great Property Meet. He's also an accomplished property investor. He's a former management accountant. He's worked for a bank. He's also worked for a law firm. So he comes at this from multiple disciplines which are all relevant to deciphering all the rules and figuring out whether this new bounce back loan scheme applies to us landlords. Andrew, thank you for taking time out to join me.
Thank you very much for that generous introduction, Ranjan. And if I can say, I'm also still a qualified chartered accountant rather than a former one. So
oh, right, sorry, I slipped up there in my list of your accolades. I must slap myself on the wrist. So
no, I have to work hard to keep that qualification.
So Andrew Roberts, welcome. And thanks for joining us today. So finally, landlords get a look in on some of this helicopter cash that the government is dishing out in the form of the business bounce back loans. Now, just explain why the last lot of loans, the coronavirus business interruption loans, hasn't really been applicable to landlords and why really landlords seem to have missed the boat on that one.
Yes, certainly. Well, let's firstly go back to some of the criterion. Some of the criterion of CBILS, Coronavirus Business Interruption Loan Scheme, was the fact that you had to be running a trading business with more than 50% of your income coming from trading activities.
And that's the wording they specifically used there.
Yes, that's a wording specifically there. And it was designed to help businesses that had hit the buffers. So for argument's sake, a petrol station, all of a sudden, most people are saying they're getting 2 months to the gallon rather than 20 miles to the gallon. So businesses like that have hit the buffers both in forecourt sales, but also sell-through of items from the store. They've also had increasing costs. So it's affecting trading businesses. But that was a big reason why CBILS was there. But CBILS also had a problem and a big flaw. If you think about it from a lending perspective, the government offered an 80% guarantee. Now, the banks prefer to be the one with the low loan-to-value risk lending, leaving you to put the equity in the risk lending. But the government were asking the banks to take the risk, i.e. the 20%, which is where the bad debt will appear. So it really hit the buffers on a couple of points there, the trading activity, but also the risk element.
And this is, of course, I mean, across the pond, Donald Trump didn't do this. He basically, the Federal Reserve or Federal Bank guaranteed 100% of the loans to their small businesses, which is why money went flying out the door. So basically, the banks were on the hook for a lot of this, and it affected their capital and all the rest of it. But the other thing was, it was quite onerous, wasn't it? Cash flow forecasts and a lot of information that had to be provided.
Yeah, management accounts, forecasts, as you say, last 3 years accounts, meeting certain criterion. And basically, you were going to go through the bank's normal lending process, having an account manager lift the lid on your business, quiz you. And I've helped a lot of people prepare applications for this. And you also had to write a business plan. So there was so much admin involved.
A full weekend's work, it sounds like.
It certainly was. It was a hard job, that was.
So, but the bounce back loans, that's a completely different kettle of fish. And it's a lot easier, the application process. The government have decided to back 100% of this in terms of guarantees, and it doesn't affect the bank's capital ratios and all of that. So they don't mind lending, being the facilitator. They're just the conduit of the government's underwriting this loan, really, without having to put much in themselves. So it's very, very powerful. But let's just look at why this is applicable for landlords and the CBILS one wasn't. And there's a subtle difference in the way the word, the different loan schemes in the eligibility criteria use the word trading, isn't it?
Yeah, there are two words added in on the different criterion here, and the two words are or commercial. Now, trading or commercial activities. Now, trading is quite obvious. You buy something, you sell it. Could be your time, could be goods and services. Now, commercial activity is defined by HMRC as any activity where you aim to make a profit. So, therefore, this encompasses an investing landlord, because you don't set up a business, and most landlords are running a business because they have to produce accounts, they have to produce a tax return, and they have to declare any profit or loss they make. And when you set out to do this, I can't think of many people, and I'm sure you didn't set out to make a loss. Therefore, you're a commercial activity. And if your track record of sales, i.e. tenants, occupying your building and your costs demonstrate you are making a profit, or some years a profit, some years a loss because of refurbs and so forth, that's a commercial activity.
Okay, so the actual wording basically forbids certain types of companies. So if you run a bank or a building site, or if you have an insurance company, public sector organisation, you're unlikely to be one of those. So it doesn't specifically exclude any type of property business. So whether you're doing buy-to-let, commercial property, refurb, buy-to-sell, rent-to-rent, serviced accommodation, whatever it is in property, deal sourcing, it's all in the package, really. It's all covered by commercial activity.
It absolutely is. It absolutely is. And I did think there was an irony that banks were specifically excluded. I could just see Barclays going, I'm going to lend to myself.
Yeah, I'm sure 50 grand would go a long way for a big bank. But the other wording that has got people a little bit confused is within the same group. Now, group has different meanings. My understanding is that a group has a holding company and specific shareholdings that the holding company has with the subsidiaries. Does it or does it not mean me being director and shareholder of, say, 3 companies? Is that a group, or can each of those 3 companies apply individually for this bounce back loan?
This comes back to the criterion. Now, normally when a word is used in a legal document, there's a hashtag #1 and then it defines it lower down. Now, when it refers to group, there is no definition. So you can either use Companies Act or HMRC definitions. And as you've quite rightly described, there is 2 differences. There is a group with common ownership of companies underneath it, or there is a group as defined by HMRC, which is connected parties. So it depends on which definition you take on board as to whether or not you use the Companies House definition or the HMRC definition.
So, and they haven't specifically excluded this, you know, so...
They haven't defined it, I think is the word I would say. They haven't defined what they mean.
So I don't see, I mean, I've just filled out a couple of these this morning. I don't see anywhere where we are making, as property people running property businesses, I don't see anywhere where we would be making a false declaration, because even in the small print, none of these wordings like trading activities or what constitutes a group has actually been defined.
Well, commercial activities is the one I would correct you on, because trading or commercial activities are not defined. Trading is fairly generic term, meaning the transaction of goods or services. Commercial activity generally means with a view to a profit.
Yes.
So it's ambiguous. They haven't actually put a definition section down below.
Well, as I always say, if they don't say you can't, then it means by definition that you can. And when you're an entrepreneur, when you're in business, I always say that the success of an entrepreneur can often go back to when they were 9 or 10 years old and how they reacted when they saw the sign that says no ball games allowed. You know, when I saw that sign, I followed it. It's a rule. So I'll go out and play badminton. No ball, I'm going out, having fresh air, having fun, playing a game, but I'm sticking to the rules. And my advice to everyone is don't break any rules, stick to them, but just be crystal clear of what the wording is and make sure you comply.
I totally agree with that. I mean, there is a declaration in there that if you lie on this application form, you may be prosecuted under the Fraud Act 2006, which could lead to either a fine or a prison sentence. However, if it's ambiguous, and my interpretation is this, if I'm sat in front of the little man with the grey wig on, and he says to me, so what did you mean? Why did you apply when it says trading or commercial activity? I will give my definition of commercial activity and say there was no other definition provided.
Okay, just to slightly contradict you there, it's not actually your definition. The issue is the HMRC and the government have several definitions.
That's right.
That they use in different contexts. And so it's not us coming up with these definitions. They haven't actually stated which version of the meaning of these words apply in this particular context. So that's why it's open to interpretation, but we're not making it up.
No, I'm just reading it and saying, well, that's the definition that applies in my case.
Okay, so we get this loan. Basically, the essence of this is that you can claim up to a quarter of your last year's turnover to a maximum of £50,000. It is a loan. It's interest-free for 12 months, at which you can pay it back. There are meant to be no fees charged by the banks. And after that, it can carry on as a 5-year repayment loan on 2.5%.
That is correct, yeah.
There's no personal guarantees, and it doesn't affect your credit. There's no credit checks at all for doing this.
It states there are no credit checks. However, different lenders are taking a different approach.
So, Andrew, the government has a website which lists all the banks which are participating in the bounce back loan scheme. Where do people find that?
It is the britishbusinessbank.co.uk. If you go on there, there will be a coronavirus logo, or on the third menu along, you'll find the details of coronavirus and other funds.
We've also got on the screen a list of the banks that are currently participating in the scheme. So, Andrew, there's some urgency behind this, and really this might be a once-in-a-lifetime opportunity to get some quite favourable loan terms and good bank financing, really. Why do you feel really this is now or never, really? It's not going to be here forever.
Yeah, well, I think there's two reasons. Firstly, let's go back to the statement that Rishi Sunak made last Monday live to the nation. His statement said, I am making available these business bounce back loans until lockdown is lifted. So it's not actually written anywhere into any of these loan schemes when they will start and when they will end. So I think if we were to work on his statements, and if he sticks to his word, and lockdown were to lift in, say, 10 days, 2 weeks' time, or something like that, That is the window for application. Within the agreement, there is a date, the 4th of November 2020. And some people have approached me and said, oh, is this scheme open till then? No, that date specifically refers to the transfer of a CBILS, Coronavirus Business Interruption Loan Scheme loan, into a bounce back loan scheme loan. So there's a very subtle difference of dates. And I think it's important that we don't get confused and we read the detail here.
I actually agree with you. I think this is, I think, you know, the summary is the minute we come out of lockdown, they'll probably say the budget's gone. And this really genuinely is a rush to the back of the room and get the last few places available offer. This is the real deal, really, when it comes to those sort of pitches.
It absolutely is. So I would suggest that everybody looks at this and grabs hold of it with two hands at the earliest opportunity. Now, I know some banks' websites have gone down a couple of times yesterday. I'm not going to name them, but that is the demand that they are under to actually get this money out of the door. So I would grab it while you can.
Absolutely, but do finish and watch till the end of this video and then grab it while you can after that, but not forgetting to like and subscribe and press the bell icon so you get notified as we release new content, because that's equally important as well. Now, it's a little bit, I mean, a lot of trendy young entrepreneurs have gone for the trendy young banks, all the starlings and the stuff that don't have high street branches and all this sort of stuff. They're not in this club at the moment. What happens to them?
Right, well, let's have a look at the way this process works. The government want to hit the ground with maximum penetration. And also they don't want leakage of this scheme getting out too early. So what they've done is brought in the big groups, the ones that basically control around 80% of the business banking. They brought them in around 6 weeks ago, and they've been working on this covertly for 6 weeks. Once they'd agreed the terms of the scheme, those banks went off and started writing the systems. The challenger banks, such as Starling and Tide and others, were then brought into the loop, and they're now playing a little bit of catch-up. Now, today, we were chatting a little bit earlier, and I unfortunately delayed this interview because I was completing an application with TSB, because the TSB bank literally went live about 2 minutes before we did, and I wanted to be one of the very first in with an application. So what I would say is keep that page bookmarked, F5 to refresh your page, because lenders are going live literally by the hour, and you'll see that list growing. When it launched yesterday, there were 8, and I think there's now 13. So the list is updating.
So, but if you need the cash right now and you don't bank, and your bank is not participating in the scheme, at the moment, only HSBC are open to people that don't bank with them, basically, for this bounce back scheme.
That is correct. They are the only bank who've opened their doors wider. Now, I wouldn't want to say that HSBC were not fully backing CBILS. I mean, RBS was the first one out the blocks. In the first week, RBS had written 60% of the loans. I think what has happened is HSBC's management, and call me cynical here or whatever, looked at it and went, well, actually, why would we want to write an 80% business loan when we can write a 100% guaranteed business loan? Let's just put the brakes a little bit on lending on this CBILS and push it over to the bounce back loan instead. And what we will do is open our doors to everybody, because we've got more cash to be able to lend because we didn't lend it on CBILS. It might be a controversial view.
One of the disadvantages with the CBILS was that there was an onus of having to prove that your business, your trading business, was adversely affected by COVID, by showing cash flows as they would be had COVID not come in, and as they are now. With this, the hurdle rate is very minimal. You pretty much just got to say you've been affected, and everyone's been affected. and up to 25% of the turnover you can claim. There could be, I guess, you're not going to know this, but it's just your opinion, really. There are going to be a lot of businesses claiming this who don't necessarily need the funds. So there'll be a lot of businesses that will be claiming this this bounce back loan. Anecdotally, there are a lot of people who furloughed who are actually okay. I mean, you know, no public transport expenses and no eating out expenses and coffee and all of that. They're actually sort of okay. So with all this money that's been pumped into the economy, when we get out of lockdown, are businesses and consumers suddenly going to spend this? Are we going to see a massive rush of inflation, do you think? What's going to be the effect of all of this money in the economy?
You've raised quite a number of points. I mean, basically, what we're saying is this loan scheme is a little bit like a Northern Rock self-certified mortgage, where basically, yeah, I can afford it, therefore I can have it. Be aware of you are signing a legal declaration. You're signing to say that you're not insolvent under EU regulations 651 2014. You're declaring that you're not committing frauds under the Fraud Act 2006. So there's lots of onus on you, and it's up to you to be honest with this. With regard to people being in lockdown, I was speaking to all of my staff last week, and they all said they're actually financially better off because they're not spending money on taking the children out, they're not spending money on petrol, they're not spending money on eating out, etc. So their cash reserves have grown. So you are quite correct. People are going to be better off after this, and giving businesses potentially up to £50,000 Kickstarter fund. I believe the reason Rishi has done this is it's a bit like a motorbike. The economy is almost stationary. So we're going to hit that crank pedal to kickstart the motorbike engine and get the economy going fast. And he wants businesses to go out there and spend. Absolutely. He wants consumers to spend, and he wants basically to have lots of activity happening within the economy. Will it cause inflation? I most definitely think it will cause inflation, and some inflation won't be a bad thing. And you and I both develop properties. I know I've hit the buffers on a couple of things where the merchants have said we've run out and it's not being manufactured. So there are going to be supply chain issues. And things like that will, supply and demand economics, cause inflation to take place. So I do agree. It's a case of controlled inflation, hopefully.
So the bottom line is, you run a business, whether or not you need the business bounce back loan, you can basically borrow it and pay it back in 12 months, and it won't have cost you anything to have that buffer in reserve. And if you want to keep it on for another 5 years, you have to pay it back, I guess, as a repayment loan?
As a repayment loan, yes. For argument's sake, if your turnover was 100,000, you borrowed £25,000, your monthly payment, interest and capital, in month 13 to month 72 will be £469. So a total of £1,589 interest on a 6-year loan. And I would say, Ranjan, does your business need to invest in equipment or processes, people in 3 or 5 years' time? Do you know whether you do? You owe it to the UK economy to kickstart us by taking out the funds and utilising the funds to grow and strengthen your business now and over the next 6 years. That would be my advice.
So I guess we're both agreeing in that this bounce back loan is almost the first measure in coming out of lockdown and kickstarting the economy. We've talked about this before. I expect some kind of post-lockdown emergency budget where we will see a whole bunch of economic measures. I wouldn't be surprised if there are some temporary adjustments to SDLT, stamp duty, to make it easier to buy properties for a small period of time. I wouldn't be surprised if there was some particularly planning reforms and PD, permitted developments, rushed in, because encouraging the property sector is a great way to kickstart the economy and supply chain, employment and all the rest of it. So we should expect to see much more of that, don't you think?
I would totally agree with you. I mean, if you think the property sector underpins virtually every other sector that spins off, carpet manufacturing is well down the line, but that is property. And the budget will announce loads of tax reliefs. But specifically going back to the bounce back is there because that's cash today to spend today. If there's an announcement, stamp duty deferral or a change in corporation tax, a reduction in VAT, all of these are down the road. They don't hit your bank account today and make you feel good. You feel good with cash in your bank. Those are things that will keep the economy rolling into the future. So my belief is, I would totally 100% agree with you. I think there'll be changes to planning rules. There'll be all sorts of things to kickstart industries, reduce regulation for a period of time, changes to immigration policies to help bring people in to pick fruit in the fields, for example, over the summer. There's going to be a relaxation of a lot of stuff, taxation through to planning.
Listen, Andrew, thanks very much as always. I will let you go and complete some more business bounce back loan application forms, and I'll leave you guys to do the same. That is absolutely brilliant, Andrew. Thanks very much. Remember, don't go away without subscribing and hitting the bell icon, because we put out new content each and every week, and it's all dedicated to helping you be more successful in property. Tell us what you think about what we have said. Tell us how you have found applying for a business bounce back loan in the comments below. Until next time, bye for now.